For taxpayers who either didn't report their foreign accounts and assets or reported them incorrectly, they're missing some accounts and assets, they didn't report the proper value, there's various ways to get into compliance, and it all really boils down to the facts and circumstances, of each individual situation. So, for taxpayers who haven't filed the necessary reporting forms, maybe they filed their tax returns or not, depending on whether they qualify as a foreign resident or a US resident, typically the streamlined procedures is one of the best, safest, and easiest ways to get into compliance. For taxpayers who just didn't file the proper forms but reported all of their income, the delinquency procedures are a good way to go, but it depends on whether you just have the FBAR or whether you have the FBAR and other forms as well. For some taxpayers, they only made very minor mistakes. Then it's important to kind of go through the facts and circumstances specifically to determine what changes, if anything, need to be filed, if anything actually needs to be remedied, if there's any missing income, or if it's just, you're missing a dormant or zero value account on a timely filed FBAR. But the one thing we do recommend against is quiet disclosure. With a quiet disclosure, you're trying to kind of sneak file your returns, FBARs, things like that. And sure, while there are plenty of people who will probably do it, and they'll probably be fine, if you're one of the unlucky ones to get caught, the IRS has made it known that they will come down with fines and penalties, and these fines and penalties will far exceed what you would have paid under the streamlined procedures.